trust that you're well. My name is Wango Miruki. I'm a social media manager, digital marketer, and content creator. And welcome to another episode on financial wellness. I'd like to say a big thank you to everyone that has watched, commented, liked, subscribed. If you haven't, please do. And remember to turn on the post notification bell so that you can get alerted every time a new video is up. And today I'm so excited we are diving into the world of banking. And to help us understand the world better is Sharmile. She'll introduce herself and we'll dive right into the subject.
Okay, thank you so much, Jessica. I'm Sharmile Saiti, a relationship manager in KCB, and I'm here to answer all those questions you have about banking.
Okay. So this is what we'll do. Kawaida, you know, the drill, we start with the myths. But having gone through everything with Sharmile, she mentioned that they intertwined with the questions I had asked, so they will have an answer. So what I'll do, I'll just mention them, and because I feel these are the things we can relate to when it comes to what you've believed for so long about banking, by experience or by hearing it from other people. So the first one is mobile stroke online banking puts your information at risk. Big banks are safer than smaller banks or credit unions. Debit cards have the same theft protection as credit cards. Banks are intermediaries simply on lending money that already exists. Credit allocation is demand driven. The banks know what's best for the economy. So those are the myths that I came across and I felt we all can relate. If you have further myths that you believed or you've had or you still are practicing, please mention down below. And so we'll move to the first question, which is like the most basic thing when it comes to banking. What should I consider before opening an account in a bank?
Okay, the first thing you should consider, and is also the thing that you consider when you're doing anything, is why do I need to open an account? Once you get your needs and the expectations you have in order, you'll be able to determine what type of account you want to open. Say, for example, you want to open a student account, right?
Yeah.
There are, of course, every bank offers different products, but all I know is every kind of bank is trying to diversify their products as much as possible to suit your needs. So write down your needs, get to know what you expect from the bank, and then now go do your research. The second thing, of course, you need to watch out for, which most people don't actually know. They normally generally refer to them as, I don't want an account with charges. Now those charges is what I'm going to tackle. The first one, which I think applies to many accounts, many checking accounts, but most people don't know about, is the ledger fees, which are the fees for operating an account. The next one will be transaction fees, which are the fees that are charged for any transactions you make on your account. You go to the ATM, and withdraw cash, there is a charge. You go over the counter, withdraw cash, there is a charge. Then the next one will be standing order fees. Under these are fees charged when you make a standing order to your bank. Whenever you ask your bank to pay someone else some specific amount from your account to their account, they charge you a fee. Now, the rest I'm just going to mention a bit because this only affects specific people, especially those who've taken loans. There's a penalty fees, which are fees that are charged when you default to pay. There's the appraisal fees, which are fees that you pay the bank to appraise you and to tell you if you qualify for a loan. And then, yes, we do that. I know. We are a business too. Okay, and then there's also the valuation fees. Say you're taking a loan that needs security. We need to see whether whatever you've given us is going to match with whatever loan we are giving you. Basically those are the charges. And then there are ways you can actually combat these charges. You don't have to face all of them because, as I've said, banks are diversifying products. They're trying to reach to every single person in the economy. So if you want an account that doesn't have charges, just go and tell them, I'm here to open an account, but I don't want those charges. I want a salary account that charges me the minimum amount. Just go ask them. Tell them you want a product that actually fits your needs.
And is there a privilege that comes with certain accounts, let's say business accounts, or a business account basically that does transaction every often? Maybe now and
Definitely
then.
there is, and that again is product specific. Say, it depends on the number of transactions you do. If you do so many transactions, you can choose a bundled option where you only pay a single constant amount for an account. But if I only do 2 to 3 transactions in a month, then I'll prefer to pay as I go, because the amount will definitely be less. As I've said again, it all comes back to what your needs are.
What your needs are.
Yeah.
Okay, now that I've opened an account, how safe is my money in the bank?
It is very safe. No, I wasn't that, but it is very safe.
Yeah.
Because the bank is normally backed up. Normally, most of them are backed up by Kenya Deposit Insurance Corporation, which is, of course, it's an insurance agency, which insures your amount up to a certain limit. The fact that I've seen, I think it's up to about 100,000. So I think up to 100,000 your money should be safe. So there now, to be careful, you need to go for those banks that are KDIC insured. KDIC is Kenya Deposit Insurance Corporation.
So if the bank collapses or anything happens, am I guaranteed the full amount?
Yes, you are guaranteed the full
At
amount.
once?
As long as it's up to a limit of 100,000. Yes.
But at once, or will they do it with, like, immediately, as soon as, like, what happened to Chase Bank?
Okay,
as soon as that.
As soon as they start liquidating, you'll just file a claim report. I'll talk about all that when we come to the dormant account. So it's a place where you ask that question.
Yeah, there is.
Yes.
Okay, sawa. So this one is very important. How do I protect myself from theft that is on mobile banking and online transactions?
Okay, cyber security has definitely been a very big issue for us. But there are some steps personally you can take to actually ensure that your account is safe. One of them is make sure you do a very strong PIN. Simple but very strong.
Okay.
Like just go to some online apps allow you, they're called password checkers or anything. Check about how legitimate how hackable. Can I say hackable?
Yeah, hackable.
How hackable your account is. Maybe I know you, because someone who hacks your account definitely must have some little bit of information about you. It could be your banker. Maybe they've seen that your year is 1996 and you look like the kind of person who just use your year as your password. Definitely that will make it easy. So first choose a strong password. Next, when you're doing mobile banking, try to clear the cache after you're done with whatever you're doing. Clear your apps. Don't just leave it there, and make sure you log out of everything. Every single device you've used, just try and log out. And then don't say you have 2 accounts with us. You have a savings account and you have a current account, or maybe a transactional account. When you have 2 accounts, please don't use the same password on both accounts, because the moment you do that, that's the moment they'll hack you on both accounts. Meaning they'll be able to reach your debit account and then your savings account. Yeah, so don't use the same password. There's also virtual private networks. Try and use the VPN to stop any sort of malware. But other than that, the bank should actually be able to protect you.
Okay. Sawa. And then the bank interest rates can be considered as low. So how can I make it work for me? Especially if I have money that I'm intending to save. That means that money, I won't touch it for a long period of time. So I don't want to like save 100k and after like 10 years still withdraw the 100k. So is there a way I can make it work with the interest? Because I feel bank interest can be a bit low. Yeah.
Okay, the highest sort of, that depends on the form of saving. Normally, savings accounts allow you to withdraw probably once a month. But there's this new one I've seen, the fixed deposit savings accounts. Those ones is where you save for a specific period, say 6 months, and you're saving towards a specific goal, and if you don't reach it, you can't open the account. Those accounts happen to have interest rates of about between 5% to 7%. I think those can actually work for
the
you.
fixed account.
Yeah.
So
you just split whatever you have into emergency fund, you do it in a savings account. Then the rest now, the one that you really want to, say I want to buy a TV at the end of this month and I really want to do it. So say I'll just take, say, 5,000 every day and just keep on putting it in my,
Okay. And what investments options are there available in a bank?
Okay, investment options. Generally, we can actually help you acquire assets in that are specialized branch.
Okay.
And in this, we can help you acquire shares in different companies. Yeah.
That's the only one. Are there others? And what will you?
So far, okay, we're not really specialized in.
That.
Yeah, but basically we can offer you advice on who to buy accounts, who to buy shares from, and such alike.
And this thing of the bank is helping me build a building. It's offering a loan.
The mortgage.
That's under mortgage.
Yeah, that's under mortgage.
Okay.
Yeah.
Sawa.
Okay.
And what can I do to stand a better chance of getting a loan in the bank? Yeah.
Okay, the first thing to do before you go look for loan is first your credit history. You have to have a nice credit history. You have to pay your debt on time, and it can't be zero. You can't actually say, me, I've never asked for money, so my credit history is perfect. Yeah. No, you have to at least have taken a loan at some point and then paid it back on time.
Okay.
Yeah, that's actually what credit history means. Another thing you need to consider is collateral.